Hello everyone, I am Mehdi and I am so happy and excited to be with you in this tutorial. We are going to talk about technical analysis, different parts of technical analysis, different techniques and different tools you need to know to have a good trades. In this session, we will talk about we will introduce technical analysis. We will talk about structure of candlestick candles, support and resistance lines, and different types of charts. In the future sessions, we will talk about reversal pattern, continuously patterns, indicators, volumes, Elliott waves, Ichimoku indicator, and other things you need to know. Almost everything you need to know about classical technical analysis. And this tutorial is practical and is who needs this tutorial? The guys that have no any knowledge about technical analysis. This tutorial is practical and useful for them. And also the expert traders, I think, need to see this tutorial, because I see lots of traders that sometimes don't pay attention to some key points that I try to talk about all of them in this tutorial. Okay, let's start. What is technical analysis? Technical analysis is we have some ways, in fact, some methods to predict the future according to what has happened in the past and what is available according to available informations. Lots of scientists use statistical platforms to check some ways, some methods that will be used to predict future. These methods, after their approval, after they have been checked, become a method that we can use to predict the futures price and what is going on in the future. We can some of technical analysts believe that lots of them, in fact, believe that chart patterns and what we can see from charts are showing us the public opinion of the traders, of the market members, and they mostly use these charts and these patterns to predict the future. Let's talk about philosophy of technical analysis. In fact, all of the factors, political factors, economical factors, news, and I don't know, everything in the market have their own impact on demand and supply. they have their own impact on prices. We in technical analysis we look at prices and and understand what is going on, what is happening, and what is going on the future, what will be happen, and this is in most cases, in fact, in most cases, in some cases, sorry, in some cases, technical analysts believe that they don't need fundamental factors. They don't need to realize what's going on the market, what is the news, what's the what has happened in the market. They believe that we only look at the prices chart and we decide what to buy and what to sell and what position to get, and we can take profit from only analyzing the charts. This is the main belief that we have in technical analysis. I personally don't use this belief, but in technical analysis, in most of cases, in some cases, traders can use only chart patterns and methods to realize and to predict the future. The difference of technical analysis and fundamental, another difference of technical analysis and fundamental analysis is a technical analyst can trade in different markets, even commodity markets, even stocks markets, currency markets, cryptocurrency markets, and but a fundamental analysts mostly the fundamental analysts are mostly limited to one market or two markets, and this is the advantage of technical analysis. If you become a good technical analyst, you can trade in different markets and you can take profit from the different markets, or you can analyze different indexes also, and this is the benefit, this is the advantage of technical analysis. What is the goal of technical analysis? In technical analysis, we try to find out when the price change will start, how much price movement is, and what is the direction. We try to find these items and make money with them. Okay, we can make money with these items. Let's see a trend in a market. I will exit from PowerPoint and go to trading view. In most cases, almost always, markets has no prices has no are not just like a straight line. The price doesn't move like this. Here, the price doesn't move like this. Mostly prices have uh, a zigzag movement, like a zigzag movement. Comes here to here, and from here to here, and also from here to here. The movements are not like a straight line. In some cases, the major movement is upward. I mean, the prices in whole movement increase, or in some cases the prices decrease. For example, in this area, price has decreased, or here the price has decreased. In some cases, in some period of times, the price hasn't any upward or downward trend. For example, I think here is a range trend that we call here. Here we have a range trend. The price for some period of times has a increasing part, decreasing part, increasing, decreasing, and it moves between these two lines. We call these movements trends. We have three types of trends in technical analysis, and let me go to our PowerPoint. We have three types of trends: upward trend, downward trend, and range trend. In upward trend, the price the major movement of price is upward. It's increase. The price will increase. The whole prices increase. In downward trend, the whole price will decrease, and in range trends, the price increases at the first and decreases and second. Here to here, the price increases. Here to here, decreases. Here to here, increases. And we can see a range trend. We call these trends a range trend. In upward trend, the bottom line we call this line that we got that is under the trend line, we call it support line, and the line that is upside of the price chart, we call this line resistance line. So this is support line and this is resistance. In upward trends, the support line is more valuable, it is more trustable, it's more reliable, and it's better for you to use the support line to predict the future movement of the price. It will have a better performance for you if you use this line. I see lots of times that they some traders don't pay attention to this key point. In downward trends, also the major movement is decreasing, decreasing, decreasing. The line that is more valuable and more trustable is the resistance line, which is in upside of the trend movement. Let's check it in the trading view. For example, let's see this line here. You can see this in upward trend. The bottom line have a better performance in the charts pattern. You see that, but the line, the resistance line, in fact, doesn't have a good performance. Just like the bottom, the support line here. This is the resistance line. Let me check its color. You see that also in the future we have same thing. Here. The support line has 1, 2, 3, 4, 5, 6, 7 times, has had a good reaction for 7 times, but resistance line doesn't work as good as support line. It has broken once more, it has broken once more, it has broken, and it started a downward trend here. This was a description about support and resistance, and you need to pay attention which line is has a better performance for you, and this a key point you need to know and you need to pay attention to is that these lines shows us the major mindset and major opinion, public opinion of the traders in the market. And when these trend lines, support line or resistance line, when these lines break, if they have a valid breakout and valid break, it shows us something has been changed, and this change is important, and its movement is maybe a big movement. maybe a big price change is on the way. And one of the good ways to trade trading is to wait for uh, trend line breaks. I don't have any good example for this, but in lots of books I have read, uh, I've seen that, and according to my personal experience, while a long-term support line or resistance line breaks, a great change mostly is on the way, and you can take and you can make lots of money with that if you understand what's going on the market. Uh, and this is the key point you need to know about this. Oh, a major movement consists of three parts. Let's oh, a major movement consists of three parts. A major trend, the greatest part, the biggest part is major trend that shows us the major movement of the market, the major traders' opinion. How do you believe and how do they predict the future? This is okay. Change the sizes. Okay. From number 1 to number 12, we call it major movement, and it mostly takes more than 1 year. For example, in this chart, I don't know how long has this price a upward trend. I think on here. Yes, from 2016, a upward trend has started till now. In that time, the price was 20. The Apple company's shares and the stocks was about $23, and now it is $145 per share. This is the major movement, and it takes more than 1 year. For in this example, it has taken about oh, it's driving me crazy. I don't want to sign in. It has taken about 8 years. It has a 8 years upward trend, and you can see the major belief that traders have is that Apple company's shares and stocks will increase and will have an upward trend, and their share will increase, and their share price will increase and increase and increase. So the major movement is that. The minor movements that we have here. The minor movements are smaller parts of the major movement. For example, in this major movement, number 1 to number 2 is a minor movement. Number 2 to number 5 is another minor movement. Number 5 to number 8 is another minor movement. Number 8 to number 11 is another one. And number 11 to number 12 is another minor movement. So let's see this minor movement in trading view. Here the whole movement has taken about I told you 8 years, but minor movements are, for example, here or here to here. It's one of the minor movements. Here to here is another minor movement. Here to here is another minor movement. This decreasing part is another movement. Here to here is also another minor movement. You can see we have lots of minor movements. A smaller part of a major movement, we call it minor movements. And also we have micro movements. The key point you need to know is that in most cases, or about 75 or 80%, minor movements, for example, in upward trend, for example, this is an upward trend, or this is an upward trend. Minor movements of the upward trend, mostly they decrease the prices in minor movements, mostly decrease from 33 to 66% of the previous movement. I mean, let me show you a Fibonacci right here. Here to here, you can see about in this part price have been increased, and in decreasing part it has became to, I can't read it, 61% of the previous price movement. Okay, but in most cases, be careful. In most cases, after a upward trend, the downward trend in most cases decrease the price from 33% to 66%. It's mostly according to the power of the movement. If the if we have a powerful upward trend, it's the decreasing part only comes to almost 33 or about 36 or 40% of the upward trend, and from that point it starts another upward trend and upward movement. We have also the same thing in cases that we have a downward trend. In While when we have a downward trend, so when the after that, when upward trend starts, the upward trend can only increase the price from mostly in 33 to 66% of the previous movement if we had a major downward trend. So it's important to find out the major movement and the uh, whole mindset of the traders is uh, increasing or decreasing. It's very important. Okay, let's go to our PowerPoint. Okay, we have described about major movements from number 1 to number 12 and minor movements. In all of the markets, we have another thing that we call it micro movements and micro channels. Micro channels are mostly from let's see from 2 to 3 we have a micro channel, a micro movement. From 3 to 4 we have another micro movement, but in most cases we call only number 3 to number 4 micro movement and micro channel, or look at here, number 6 to number 7 we have another micro movement. These are micro movements and they mostly happen after a new which is not important important enough to start a big movement or change the trend and the trend of the market. Yes, unimportant news make these movements, like number 9 to number 10 movement. These are micro movements and mostly they don't take more than 3 weeks, or in most cases they take about 1 to 3 or 4 days, but in very few cases it takes more than 3 weeks. Okay, we have described about different parts of the major movement that you need to know. Let's start talk about different phases of a movement, how a trend, how a price movement starts to how a trend, the formation of the trend. In the first phase and in the first part, we have accumulation part, which the market experts find out a great movement is starting. They mostly use accounting calculations. They find out a symbol is valuable and it will it will start a big movement, big upward or downward movement. They start to buy that share, or they in cryptocurrency market they start to buy that crypto asset, or in the stocks market, or in maybe in commodity market. They start to buy that asset, and after a special period of time, you can see uh, the second part of the movement starts: public participation. The second part is public participation. When uh, the the valuability of a symbol, when it is it becomes a viral, in some Facebook accounts, in some websites, in when some of these experts talk about that symbol, the public participation starts, and second group of the traders start to buy that symbol, and the second phase starts. We can see in this phase the prices uh, start an upward trend, start to increase. But in the first phase, in the accumulation phase, we cannot see any great increasing movement, because experts of the market, traders that try to find out the valuability of a symbol, and they try to trade according to the valuability of a special symbol. They are they they have they pay attention to that, not making a not great change in the prices. They try to buying, but in most cases they have not lots of money to make a great movement in a great growing movement in the prices. So the prices in the first phase doesn't have a upward trend. They doesn't have it's hard to find out these traders are where are these traders going, what are they trading, what are they investing, I mean. uh, this is the two parts, two important parts of a trend movement, and you need to if you want to be a successful trader, it's better for you to find out where in which phase uh, the trend is in which phase, is in which part. You are in, for example, you are in number one part of the movement, for example, here the chart may be decreased. The price may be decreased before this chart. The price may have been decreased, and the most experts start to buy in these parts here in these prices, or some of them start to buy when a trend line breakout has happened. For example, here in this area, they will start to buy this symbol, and after that, experts will have a very huge benefits, will make lots of money, and also the technical traders, expert technical traders, make good money according to their rules, their own special rules, and after that, excess phase, the third part of the move, starts. In excess phase, expert traders start to sell their stocks or their assets, and they find out at the moment it's better for them to cash their to sell their assets and change their money to cash, and in this phase, also after the expert trader, after the expert investors, in fact, the technical traders also get important signals like trend line breakout, trend line break, that are very important. And after that, the traders, the expert traders and expert technical analysts leave the market. And in that phase, for example, in last example, it is from here, in this area, expert traders start to get out of the trend, and also after that, when the movement starts and the prices, the chart price, the price chart, the price chart starts to break this this support line. They get a good signal to leave the market. The market members, the powerful market members have been leave the market in this area. So a technical analyst also leave the market and saves their profit and benefits in the market. These are three parts of formation of a trend, three phases of the trend, I mean, that it's good to uh, know about this subject. Uh, okay, let's continue. Um, oh, let's talk about charts and candlestick informations. If you're a beginner in technical analysis, uh, if you if you are a beginner, you may uh, say, "What is this rectangle? And what is this? And what are these?" I will explain about this subject. We call these shapes candles, and they have information, some information in themselves. Uh, for example, let's draw a candle for you. For example, the candles that are green uh, in the uh, in the green candles, the price increases. We have a increasing price of like an upward trend in these candles. This is not a trend. I mean, uh, the price increase in themselves. For example, let's draw a candle for you, an example candle for you. We have a, it's not a good candle. Oh, that's good. A candle is like this. A green candle, which is which price in that increases in the lowest part of the this candle here in this point. $116, for example. Uh, uh, Price starts a movement. Price in this day, price starts from $116, and it increases to here, maybe come to here, and after that, the price closes. And the last price, I mean, the last price of the market is $159. Okay, so in this point, price opens, and in this point, price closes. We call this part of the candle. We call this part of the candle body of the candle. This is the body of the candle. And also here this part, I mean these parts, are shadows of the candle. Let me remove extra objects. This part and this part is also called shadows of the candle, and in this period of time that we have, maybe it can be 1 week, it can be 1 day, it can be 1 hour, it can be 1 minute. In candle period of time, uh, here is the highest price of this period of time. Here, $173, and here is that is $100, is the lowest uh, part, lowest price of the candle. So we have a body in an increasing candle. Price opens from here and closes to here, and in that day the price comes here and lowest price is here $100, and highest price is here $175. This is an increasing candle. We call it bullish candle. Also, we have bearish candle, which have another color. Let me show you a bearish candle. In a bearish candle, price start opens from here, from this part, which is $158, and the price closes in this part, this price $116. And in this period of time, the highest price is here $174, and the lowest price is $100. Okay. For example, in this candle, I will explain more for better understand, for you to understand better for the guys that are beginner to markets. The price may start here, from here, increase to here, and the sellers, the guys want to sell their stocks, their assets, start to sell their assets and decrease the price, decrease to here, to this price. And after that, some of the traders find out this price is good price to buy, and they start a competition to buy more of these shares, and they will increase the price to here. Okay, so the major movement is decreasing, and we have some shadows here and here. In this session, we will explain about the power of different types of candlestick, different candles. Okay. We have another thing that is, we have also charts. In vertical axis, we can see the prices. Vertical axis shows us the prices of the market, and horizontal axis shows us the time that we are in, the time that we are in. For example, here is May 22. We are in May month, and 2022 May, and these are informations that we can uh, exclude from charts. We can understand from charts these informations. Let's go to our PowerPoint. How to understand chart information, we have described about these two items. Let's talk about logarithmic scale and linear scale. Well, let's explain it on the chart. Well, in one period of time, the price may start from $10. Yes, then I can find $10. Sorry. Yes, here $10. The price may in one day start from $10 and come to $20. And let me change the color of the our drawing candles. May start from $10 to $20. Okay. After that, the price in the next day, the price starts from $20 to $30. No. Okay. The price has started from $20 to $30. In third day, price starts from $30 to $40. Am I right? Yes. In linear scale of showing these prices, all of these candles have the same size. But in logarithmic scale, this is a linear scale that shows us the changes in the market, in the prices. But in the logarithmic scale of showing these prices, we can click here to show a logarithmic scale. In logarithmic scale, when price starts from $10 to $20, the price has been increased $10, but the price let's talk about second candle. In second candle, price has started from $10, $20 to $30. Okay, the price has increased about $10, but it has increased also 100% of the previous price Okay. In the third part of the movement, I mean from $30, I'm sorry, the price has 20 to 30, 50% has increased 50% of the previous price, which we can show you like this, 20 to 25. Like this, candle becomes like this. From no, where are my drawings? Okay, no problem. When price starts from let me show you $10, $20, like this. Sorry. $10 to $20. 20 to 30, 30 to 40. In linear scale, I'm sorry, in logarithmic scales, price starts from 10 to 20. In the price change from 20 to 30, the price has been increased only 50% of the whole price. So this is not increasing like this looks like this. Okay, in logarithmic scale, the price has according the candles will be shown according to the percentage of their movement. Okay, how not according to the amount of the price change and movement. Most of the traders use linear scale, but in some cases, in most cases, logarithmic scales have a better performance. Let me show you another example. 10 to $20. Sorry, $20. This was the second day. It is in second day in logarithmic scale. Candle will be shown like this because the price has been increased about 50%. In the third day, the price will be shown from 20 to from 30 to 40. It increases about 30%. I should draw like this. Yes. The prices increase according to the percentage of the movement and according to the previous price, I mean. Yes, I think this is enough to understand the difference of these two scales and I mean logarithmic scales and linear scale. Uh, you need to know that uh, we have no approved scientific resource that tell us which scale is better, which scale has a better performance. But one of the uh, advantages of the logarithmic scales is that it shows us the breaks of the uh, support and resistance lines. Uh, it shows us faster, and this is the main benefit of using logarithmic scales. And you can see there is no huge and great difference in short term. I mean, the difference, their difference is understandable. You can see the logarithmic scale has, I think it has a better performance. And I personally use the logarithmic scales in my tradings in times that I want to understand a trend line has broken or it has not been broken. This is important to know. Uh, I think we have explained enough. We have explained enough about uh, different scales that we can use uh, in the charts. In short term, there is no difference between there is no specific difference between these two types of chart scales, and you'd better to use logarithmic scales if you are using line term charts. Yes. We have talked about the differences and usages. Mm, okay, let's continue. We have three types of charts that uh, you may see in different platforms. And these three charts are most common charts. Um, line charts, this type of chart, and candles chart, and bar charts. The line charts connect the close price of each one of the candles. This is the how is a line chart. The greatest disadvantage of uh, this type of chart is lack of the details. In this type of chart, we almost have no details about the open price. We have no information about shadows and um, the changes of the price, the power of a one-day movement and candle, but uh, its benefit is simplicity. It's too simple. Everyone can understand this type of chart. Uh, and another type of chart is candle chart. This type of chart has good detail, has enough details for us to find out uh, how how much powerful is a price movement. For example, this candle, this bullish candle, this increasing candle is a powerful candle. Uh, this candle is also a powerful candle. This candle is a powerful candle. And this type of candle is most common candle um, for the traders. And in the future we will use this type of candle. Another type of candle that you may see in some cases, this is not common, very common, is bar candle. In bar candles, we have three parts. Here and here. This left bar shows us the open price, and this right bar shows us the close price. And this here and here to here is just like shadows of the candles in candlestick bars. I have described the information that you can find out in a candle. These are price, in fact, shadows. The price may move from here to here and come back to here and start an increasing part to here, okay, or maybe start from here, decrease to here, increase to here, and start a downward movement to here and close in this price. This is the bar chart, a bar candle, a bar chart. I don't know, candle item. What to call these types of charts. I don't use these. Let me remove these things. Also, decreasing bars have this shape. Price starts from here and ends to here. And this is also a decreasing bar. Okay, let's continue our PowerPoint. We have described all of the most common three charts for you. In candlestick bars, in candles, we have different candle powers. Different candles have different power and have different information in themselves, and they tell us, they give us informations about what is the major movement, what is the major opinion of the market, what is going on the market. For example, the candles that are green, or in some softwares and platforms are blue, or in some platforms that are white. White candles, or in here the green candles, are increasing candles, and each one of these candles have different power. Let's talk about the most powerful candle. This candle, in the left side, is the most powerful candle. Price starts from here and ends to here. We have no shadow. In most cases, shadows shows us the uncertainty of the market. In this candle, we have no shadows, we have no uncertainty in the market, and the price starts from a point and starts in a powerful increasing movement during this candle, and it shows us the power of this candle. It shows us the power of this type of candle. You can see here same candle, or here a same candle started a big movement, and after that we can see a big movement starts till here. Okay, be careful. The place that we see these candles are very important. They are as important as the signal and the power of the candle. This candle is also the volume of the candle. This candle has a huge volume of trading, huge volume. It has a good position. It is in a good area. It's on the support line, and it has a big body, big candle body. It has a long body, and it shows us in this week lots of traders believe that this candle, the Apple shares, Apple stocks are very valuable, and it will increase. Its price will increase, and you can see that the prices started an increasing movement till here, from $45 to about 70, $55 to $55. The prices has increased. This is the most powerful candle. Another candle you can see is we call this candle solid bar. Another candle you can see is like solid bar, but it has a little shadow here and a little shadow here. It shows that the uncertainty of the market. Let's see the charts. For example, here we have another same candle. It is in a good area, but it has not a good volume, a large volume. But it has started. It's not an ideal candle, but it's, for example, let's see, it has broken downward trend resistance line. Yes. It has broken downward trend resistance line. Three bullish candles and another. This is a good signal. This is a good signal to buy this symbol. It's also in resistance area. It's on a resistance area, and yes, the volume is not. It's so. It's. I personally think this amount of volume. It's better to have more volume of tradings, and the upward trend has started. Another one like that is here, and we can see it has a big movement from. It has started a big movement from here to here, and this is also a powerful candle. Another candle, this is the most powerful. After that, this candle has a good power. After that, we have another candle. That we have a body here. In the body, we can see the prices has increased, and it has a big body. Also, it has a long tail, long shadow under the candle. It shows us a little. The market has a little uncertainty, but the traders believe that the prices will increase. Here, this shadow shows us. Let's see what has happened inside this candle. The price started from here and started a downward movement to here. But the traders, the market members, realized that this symbol will be valuable if I mean, this stock will be more expensive. The price of this symbol will increase, and in this point they have started to buy, and their competition to buy more and buy more and buy more uh, moved the price from here to here. Okay, and we have not shadow in upside of the candle, but in this candle we have a shadow here that shows a little more uncertainty in the market. In the charts, we can find a same candle here. After a downward trend near almost near the support line, this candle increases the prices, and after that we have three other increasing candles, and after these candles the market with this candle, for example, here, this candle, this candle, this candle, and the candles haven't big body, hadn't big body. Also, they had shadows here to here to here. This shows us the market doesn't know the where the price is moving, and after that the prices has started an increasing movement to here. The reason here that most of traders didn't know what to do because of it was near a resistance line. They didn't know the price will have this movement and increase, the prices will decrease, or the trend line will break and the prices start an increasing movement. After the break, after the trend line break, they have realized that the price will have an increasing movement, and they've started to buy, and they have increased the price. You can see here most of the shadows, most of the candles shadows in the downside is under the candles. It shows that in this area, I mean here to here, it shows that market has a little uncertainty, but they believe that the prices will have an upward trend, and this trend has increased the price to here about $81, and these are candles. These are the information that candles give to us. Another candle is this type of candle and this type of candle. The price started from here, increased to here, and from here decreased to here. It is an upward candle, but it is a little dangerous. The prices may decrease after this candle and this candle. You can see how has upper shadows here has decreased the movement. Uh, these candles, these two last candles, are valuable when they are near the support line. For example, when they are here in this area or in this area, you can see uh, the price line, the price charts has now. I don't want to log into trading view now, and it is driving me crazy. For example, we were here. Uh, when uh, price charts and candles are near support lines, these candles are more valuable. You can see this candle is not powerful enough, but the support line has increased its power, increased its valuability and reliability. Also, this candle is not much powerful like this solid bar candle, but uh, it has a large trade volume. It also is near the support line, and after that, uh, we can see uh, a downward trend line has been broken. Okay, you can start buying from here in this candle. Okay, and take this profit. Okay, these are candlestick bars. Sorry, these are some 1, 2, 3, 4, 5, 6 candlestick. I don't know, signals or 6 types of. Um, I want to. I want you to know that the power of each one of these candlestick signals and each one of these candles, I mean, and where in which cases these candles are more trustable, and you can start trading with them and make money with these rules. You know, for example, uh, in here the trend line has been broken, but the major movement is upward trend. The break maybe become a false breakout, and but it can be also valid breakout and decrease the price. The trend line also haven't been broken here, so I don't know what will happen, but I believe that the price will decrease more in Apple company shares. I want you to become able to find out where is the price chart and price patterns going. Okay, let's talk about another point you need to know that we call the candles, the increasing candles. We call these candles bullish candles. All of these candles are bullish candles. All of these green candles are bullish candles. And also, when we say bulls of the market have the power of the market, it means that you may hear or see this expression. It means that um, the buyers of the market are controlling the market, and the prices are going to increase in the future. These are expressions you need to know. Another candles are bearish candles that have different powers. The first candle, which is the most powerful candle, is bearish solid bar candle. We also call the candles which the prices decrease in them. We call these candles bearish candles. The first candle, which is the most powerful candle, is the solid candle. It has no shadow, and the market has no uncertainty. All of the market, almost all of the market members believe that the prices will be decrease. Let's see some examples. Uh, it's hard to find examples of this candle because the trend of the Apple company shape stocks are upward trend. For example, this candle looks like that, but it has two shadows in the bottom and on the upside of the candle. We have two candles. We have two shadows. This looks more like solid bar bearish candle, but it is not in a good position, in good area. In this area, these types of candles are more valuable and more trustable. This is a solid bar bearish candle. This is the most powerful candle that you can see. You need to pay attention to area that this candle is in that, and also the volume of that candle. For example, this candle has a big volume, has a good volume. It's not in a good position, it's not in a good area, but it has a good volume, and it has enough power to decrease the price. In the other hand, this candle has a big volume. Also, this candle has big volume, but it's not on the it's near the support line. If this volume was around a resistance line, we could see its impact, and we could see the major movement that the uh, I mean the the big movement that it can start. This candle is also a powerful candle. The second candle is also a powerful candle, and it has a little uncertainty in the market that with in shadows. You can find it from shadows. Find out it from shadows, and it has a little uncertainty, but it has a power. You need to pay attention to area that this candle is shown, and you can use this candle. This candle and this candle are also bearish candles, and shows that the prices will start a decreasing movement. Prices has started from here or here. Some of the traders believe that the prices will start an upward movement, and they have started to buying and get buy position. They have increased the price to here in both of the candles, and after that the prices, the sellers of the market start to sell, and they have decreased price to here or here in this candle. In this candle, after that, some buyers started to buy and increase the price to here and close point. And these two types of candles shows that the market members are not certainly they believe that the prices will decrease, but a little in some parts of the market they have increased the price in these shadows, and it shows the uncertainty in fact, but the sellers the sellers are more powerful. The guys want to sell their shares. The ones want to sell their crypto assets are trying more to sell their assets. They have more competition to sell their assets, and this is the reason that prices decrease, and a bearish candle shows. These two types of candles are also bearish candles, but they are powerful. Let's see, the shadow under the candle, the shadows in all of the candles, the shadows under the candles show a upward trend, shows that the traders are trying to push the price to start a upward movement, but they haven't been able to make that price. For example, in these two candles, in this candle, price started from here, decreased to here, but buyers started to push price upper and upper and upper to here. And in this point, the market has been closed, or that the period of time of that candle has been finished. In this candle, we have more uncertainty. In fact, if this candle occurs for example, support lines, we cannot call it a good signal. It's a deceptive candle, and you should know this candle, in which area this candle may you may make a mistake in your decisions when you see this candle. Let's see the charts. We can't find lots of decreasing signals, but because the trend is upward, but I will show you some of these. For example, this candle, you can see it has some shadows in upside and downside. Before that, we can see some doji candles, which shows that the prices, we call these types of candles doji candles. We will explain more about this in future parts of our tutorial. This, for example, this candle is an increasing, it's a decreasing candle. It's in a good area. It has a big volume, but it has some shadows. So the market is still in uncertainty, and the market members don't know where is price going to go. And here, which we have a good candlestick signal, which have yes, it has a shadow on upside of it. It has a big body, and but its area is not good, and in this area we cannot trust this candle. It has a big volume, and after that, when we can see the trend line when breaks to, and the price chart goes on the upside of the trend line, on upside of the resistance line, I've told you that in downward trends, resistance line is more effective and more reliable and gives us a better signal. The price starts a good movement to here, and also when we can see the support line is broken, we have 1, 2, 3 candles at the under the candle. We can say this trend line is broken. In classic technical analysis, when we say a trend line has been broken in classic technical analysis, I don't mean price action. When 3 candles close under the trend line, let me remove this line. When 3 candles close under this line, this trend line, it's better to use daily time frame. When 3 candles close under this line, this support line, or when the prices become more than 3 or 5% under the support line. In classic technical analysis, we understand this line, this is a valid breakout, and the price will start a movement under the price chart. This is the classic technical analysis to find out the valid breakouts, valid breaks, in fact. Okay, this session was the introduction about technical analysis, and I have introduced the tutorial for you. Subscribe our channel, like our video, and share with your friends. I'm so happy to be with you in this tutorial, and follow us in next tutorial, and I will try to tell you most valuable and tricks that you need to know about technical analysis and trading. Most of our tutorial is about technical analysis. I will try to share with you my personal experiences and things that I have passed to become a successful trader, and I will become so happy to help you to have a better life, to have to make more money, and if you have any questions or if you need any help, you can ask me under the this videos in comments part, and I will try to help you and solve your problems. I don't know, or anything I've been able to do, I will do for you. Thanks for your attention, and bye till the next video.